All right. So I'm excited because we're going to be talking about a subject that's really good to know a lot about, and that is insurance. Because when you're a business owner, sometimes it feels like there's a lot of people sticking their hands in your pocket, and you're like, well, what are all these different things I got to pay for? But it's good to know what they all are. And insurance is one of those things that you really not just need to have because Amazon might tell you so, but because, well, we'll get into some of all that in this discussion. So I'm excited to have on my insurance agent for coming up on about 5 years now, Matt Lovell from Well Insurance, and he is a partner and co-founder. So Matt, thank you for joining us on the Maximizing E-commerce podcast.
I appreciate it, Kevin. Thank you for having us. I was going to give a little background about myself.
Yeah, why don't we do that? So tell me a little bit about, how did you dive into the world of e-commerce? We'll just go from there. So we'll just have a conversation about insurance, so to speak. But folks, stick around because this is going to be stuff that you're going to want to make sure you know about. So I'd grab a pen and paper if you haven't grabbed it already.
Well, I've been in the insurance business for going on 23 years now. Mm-hmm. We're in a little small town in Western Kentucky. About 6 years ago, we had one of our customers who's in the textile business, sells on Amazon, came to us and said, if my Amazon account gets suspended, do I have any insurance coverage, any business income? And the answer was no. So she asked us to go to the market and find a policy that would take care of that. Well, after some investigation, that policy didn't exist. So we put together the world's first Amazon suspension policy. It was underwritten by Lloyd's of London. That became available in early 2016, and it was an income reimbursement policy at first, changed to an expense reimbursement policy after about 6 months, and then COVID hit. Lloyd's pulled the plug in 2020. They were going to make some changes to the policy, reduce some of the wording, some of the forms, and then, like I said, COVID hit. It's still sitting on someone's desk in London and has not reappeared yet. But in the meantime, we had already transitioned to the general products liability side of things, to try and protect sellers, protect the assets of an e-commerce business. And so that's kind of where we're at today. Amazon started enforcing their own terms of service in 2021. And so we've been taking care of Amazon sellers, making sure they get the correct certificates of insurance, to get those uploaded on Seller Central and get Amazon satisfied, so they won't risk suspension for lack of an insurance policy being on their file.
Yes. So back to I was alluding before, there are requirements Amazon has, which we can get into here in a moment as well for folks. And then also just a little bit of background. So in addition to you've been my insurance agent for my business, I have also been in the insurance world. So I was more training and recruiting for health insurance agents. Now, as people learn, insurance is a very broad term. Sometimes we think, oh, it's just insurance. It's just insurance. So there's so many different things. So your health insurance policy is structured so differently than your car insurance policy, which is called property and casualty. And commercial liability is probably more similar to auto. I don't know if that's a fair statement you'd agree with. Or your home policy, maybe, but it's not the same at all.
Correct. No, very, very, very different. A commercial general liability policy is what any business owner needs. That will protect you for not only premise liability. Someone comes on the property, trips and falls, wants to sue you because they slipped on the ice out front of the business, something like that. The dog runs out, they trip over the dog. But it also, the products liability, which is part of a general liability policy, protects you if one of your products were to cause bodily injury or property damage. If it were to make someone sick, or if it were to, if it had a battery in it, the battery explodes and burns a house down, and you were to be sued for that, the policy will pay to hire an attorney to defend you, and then also pay any of those damages that you're found negligent of, possibly in the courts. So that's what a commercial general liability is, a casualty type of policy.
Okay. Well, let's take it back even farther than that. Let's go with a very textbook definition. What is an insurance policy?
An insurance policy is just simply a way to cover risk, cover the assets of the business. protect them, protect the business from lawsuits, from something you may do that's negligent.
Got it. And sometimes it's not even necessarily something you did that's you even knew was negligent, or you being nefarious, or just things happen. One of the things I learned quickly in the insurance business was it's an entire business structured around we'll figure it out when it happens. So there's all these different variables in a policy. And to your point, it's shifting the risk. So if you don't have insurance, you're taking on all the risk. Now, some people might say, yeah, but I have an LLC. So what does an insurance policy do different than an LLC? And I know this is a very basic question, but these are the things that I've heard people ask over the years. So I just thought it'd be helpful exercise for folks, even that know the answers to these questions, just to kind of hear it and reiterate it.
Right. An LLC does help to shield personal assets. So if you operate a sole proprietorship and you were to be sued, then basically your home, your cars, your retirement, your personal assets are on the line as far as that lawsuit goes. By forming the LLC, it doesn't necessarily take your personal assets 100% out of the picture. An attorney can always get to those, but as far as it helps to shield the personal assets by forming that LLC. So it just puts up another barrier that if that lawsuit occurs, what that attorney can go after and what they can't go after.
Got it. So the LLC creates a little bit of, or LLC incorporated, C Corp, S Corp, whatever. So if you have some sort of entity other than yourself, you're creating a little bit of structure from your own personal assets than from the business itself. So if the business goes under, or gets sued or whatever, at least there's creating a barrier, which to yourself, as you pointed out, sometimes lawyers find ways to pierce it. And as I understand too, sometimes in some court cases, it's even been because the person didn't have insurance, so they weren't really operating. There's a lot of formalities which we don't have to get into here. Please go talk to a lawyer. It's good to talk to a lawyer. If you haven't talked to a lawyer in a while, you probably want to talk to someone just to make sure you've got everything structured right, because you might have structured everything 3, 4, 5, 10 years ago, but then maybe things have changed. So you might just want to just get a little tune-up. Like you might go to the physician to just get checked out. You might want to go to the lawyer to get checked out, but you also probably want to go to an insurance agent and get checked out too. So now let's talk about the insurance policy. The insurance policy is not protecting, I guess maybe theoretically it is in essence, but at its core, it's protecting more the assets of the business. Is that a fair statement?
The assets of the corporation, the S Corp, the single member LLC. Now the single member LLC is a little more vulnerable to their personal assets being brought into the picture, whereas from the corporation side of things, whether that's a C Corp or S Corp, those are definitely shielded at a much greater level than the single member LLC is.
Okay, so basically you've got we're talking about creating some sort of insurance policy that's shifting risk of whether it's litigation or some sort of something bad, which hopefully never happens. It's the thing with insurance. It's you hope it's never there, or you hope you never have to use it, but if it is there, it's there. And so you're shifting some of the risk away. And that's why, when you see like policies that have maybe $1 million liability or $2 million liability, whether it's occurrence or whatever the case is, right, all that is being really shared amongst other people, shifting the risk together, and the insurance company is kind of facilitating that in essence. That's why you're not getting $1 million bill, you're getting a bill for hundreds or thousands or whatever the case is.
Right. That's where an insurance company can pull multiple thousands and thousands of sellers or thousands of customers. Mm-hmm. And the actuaries look at the numbers and say, okay, we need to get X number rate for this classification or this business type, just to cover those potential losses. And that's the reason that you pay $400 or $500 a year in premium versus $4,000 or $5,000 or $40,000 or $50,000. It's just the companies are splitting that risk between all of the customers.
Got it. So they're shielding the risk and whatnot. We'll get a little bit more into some of the nuances of the commercial liability policy, but I also want to focus a little bit more on the difference between just the basic differences in a commercial policy and, let's say, you might have a home policy, or that's protecting your house, or you might have an auto policy. You might have I've heard people say over the years, well, I have an umbrella policy. What is an umbrella policy, and how is that different from a commercial policy?
Well, it depends on whether it's a personal umbrella policy or a commercial umbrella policy. But what an umbrella policy is just excess liability. On your home and your auto, you have liability limits of 100,000, 300,000, 500,000, a million. It just depends on what you personally have on as far as your limits go. Typically, an umbrella requires you to have a minimum of at least 300,000. But what that is let's say you have 300,000 on your auto policy, and you're involved in an accident, and it's a serious accident. There's a fatality, and there's you run the stop sign and you T-bone mom, dad, and two kids, and one kid is permanently disabled, and you get sued for $2 million. Well, your auto policy is going to pay that first 300,000, and when that number is exhausted, the insurance company basically wipes their hands and says, "Thanks for your paying your premiums. Thanks for the policy, but we're done.
Right. We did our part as to what's in the policy."
Correct.
Yeah.
But what an umbrella is umbrellas are sold in $1 million increments, typically, $1 million up to $10 million. That can be purchased relatively inexpensive. But what that does, that pays that difference in that $2 million judgment, where the base auto policy only paid the 300,000. The umbrella, if you had a $2 million umbrella, that would kick in to pay that 1.7 million that was left on the table, instead of you having to go to your pocket and start selling homes, selling assets to make that happen, or be in debt for the rest of your life.
Got it. And that all comes down to the personal side of the equation. So
Correct.
Let's just say on one side of the equation, we have personal. You get into an accident, you driving as a private citizen, not anything business related. You're just, driving to the grocery store. You look down at your phone for a second, and, as they say, life can change very quickly. So something happens, and all of a sudden you're being sued. The insurance policy, or, State Farm, Progressive, Geico, whoever is picking up whatever's in the terms of the policy. But then if it goes beyond that, then you might have an umbrella. But that's all on the personal side. Or same thing with somebody slips and falls on your property, which those type of things are a little bit probably not as big, but there's always those strange.
There's always that chance. I mean, somebody could become worst case scenario. Somebody breaks their neck, and they're a paraplegic in a wheelchair for the rest of their life. And
exactly,
because you had a wet spot in the floor and you didn't have the sign up to indicate that you just mopped, or
and we're still talking on the personal side of things. Weird stuff happens, Think about all the people that come on your property on Halloween if you have a house, the weird things that could happen. Now, we're not saying things are going to happen. We're not trying to play, fear here, but weird things happen. And that's really kind of the gist of this conversation, is weird things happen outside of your control, and that the insurance company is giving you, shifting some of the risk from you. If something bad happens, goes to them, and you're paying a premium for that, and the premium being the cost of the policy. Now let's get back over to the commercial side of things. So we've got our personal things that cover our personal assets for personal situations that might come up, and then now, hopefully we've by having some sort of entity, if you're not operating with an LLC, corporation, something, go talk to an attorney. Don't take our word for it, but go talk to an attorney about setting something up there, because everything we're talking to is just another disclaimer, everything we're talking to is general terms. So don't take anything we're saying as financial advice. But with that said, commercial side of things. So let's just not even worry about Amazon yet. And that Amazon has rules that require sellers at a certain level to have an insurance policy. What are we trying to protect against? Again, and you kind of said that before, that something could happen on the premise, but Yeah, I'm everything's in the cloud. If I
Right,
ship
right.
things from a factory in China, there's just the things I know people say. Ship things from a factory in China to a Amazon fulfillment center. So I don't have a store. No one's gonna slip it on a mop, or
Right,
something like that. So,
right.
what are the things that could happen? And again, we'll get into some of the nuances of the actuarial side, which is a little technical, but we'll get there for folks. But
Well,
on the
even
just what are just a very basic standpoint, what could happen to an e-commerce seller that they may not have even thought of?
even though that you have a home office, you import your products, or you buy those from online arbitrage, and you send them to you may send them to your garage, you may send them to a 3PL, then they go to FBA. You still have a premise liability. If that postman or that UPS driver is dropping off packages for your business, let's say your dog runs out and he trips over the dog and he's paralyzed, or the dog bites him while he's dropping off packages, or you still have a premise liability exposure, whether you want to think you do or not. If you go to someone's office and you cause property damage, let's say you're in a manufacturer's office and you turn around and you knock over a priceless vase that's in the corner. That's property damage that you've caused. You may not consider that, but that's something that is covered by the insurance policy.
Mm-hmm.
But the main concern for an e-commerce seller would be the product's liability, and that's under the products and completed operations as far as the coverage is defined in the policy. But that pays for bodily injury or property damage that one of those products could cause to someone or some property. Typically, a commercial general liability policy is sold in $1 million per occurrence, 2 million aggregate. And what that means is that the policy will pay up to $1 million for any one occurrence, or any one claim, any one lawsuit. And then over the course of the policy period, over the course of the 12 months, the policy will pay up to $2 million total. That's what the contract that you agree, that basically an insurance policy is a contract between you and the insurance company. And that's what you will have agreed upon, is whatever those terms are. So you could have 4 $500,000 lawsuits. You could have 2 $1 million lawsuits. However that $2 million is arrived at, that's the most that the policy will pay is the general aggregate.
Got it. So up to $1 million or whatever the case is. And some of it is, there was that, was it farmers insurance, where it was like the guy had the amount of insurance he would need for a Lamborghini, but it had like a basic sedan or whatever, and then someone else vice versa. And so, there's different things you might need, which we can get into the bells and whistles of making sure, you're not covered for a Lamborghini when you might need to be covered for a basic sedan, or vice versa. But let's get to the product liability. And so what are the type of products that have more liability than, or let me help take this back even farther. Are there products that have the potential for more liability than others do?
No question. If you're an arbitrage seller and you're reselling products of others, your product's liability exposure is very negligible. If you're selling Nike tennis shoes and that tennis shoe falls apart and someone trips and falls and hurts themselves, that customer is going to sue Nike. They're not going to sue John Smith, the retailer that's online that sold those shoes to them. Now, not saying that retailer might not get brought into the lawsuit, because an attorney's going to try and sue everyone possible in that scenario. So they're at least going to have defense costs. They're going to have to hire an attorney to defend them, that sort of thing. So you are going to have some expenses, which the insurance policy will hire the attorney to defend them. But as far as what products are, really have a product's liability exposure, is anything that you're importing, whether that's private label products or even white label products, specifically from China. When you become the importer of record on those products, you assume all of the product's liability exposure at that point. Even though you don't physically have anything to do with the manufacturing process of that product, you essentially become the manufacturer of that product. whether you want that or not, because you can't subrogate back against a Chinese manufacturer. So your business becomes the manufacturer, and you need to have a policy that covers you for those products liability and covers you correctly for those. And it's not classifying you as a retailer, but classifying you as either an importer or a manufacturer for whatever those specific product types are.
Got it. Okay. So that leads us down a path of, I think a good question to follow up with that is, last year, as we're recording this, Amazon went from, hey, here's our requirement, which was at the time kind of loosely enforced. Like, I had uploaded the policy. I had the policy, but I don't think I ever uploaded it, just because, they never asked for it. Then all of a sudden they started saying, well, here's our policy, which we've had this for years we've been having, probably shouldn't say policy. Here's our terms of service that have required you to have a insurance policy. Please upload by X date. And so people started freaking out. And I know there was a lot of talk at the time of, like, Reddit or forums or Facebook groups, like, oh, well, I talked to an insurance agent and they said it was going to be like $1,400 or whatever. But then Amazon had some ones we could go to, and it was like $400. So I just picked the $400 one. Why would there be such a big difference?
If as far as insurance goes, you need to be very, very upfront with the products you're selling, how you're sourcing those, whether they're your brand, your label, versus just versus reselling products of others, because it completely changes your product's liability as far as your exposure goes. If you were to be importing products, let's say you're importing baby products from China, and you don't tell your insurance company that you're importing those products, you take out a policy through the Amazon Accelerator program. It's $500 a year. Send them a certificate. They check the box on your Seller Central account that you are in compliance with the insurance, and you move on. Well, 3 months down the road, you receive a lawsuit from an attorney that one of your products caused some type of an injury for a baby. You turn that claim into the insurance company. The insurance company is going to say, wait a minute, we thought you were reselling products, somebody else's brand. We didn't know that you were selling your brand, importing these products from China. We're not going to pay this $1 million lawsuit. You're on your own. Go hire your own attorney, start cutting checks, basically. So people need to understand, just because you get an insurance policy doesn't mean you're covered. You need to talk with an agent, let them know what you're doing, let them know how you're sourcing your products. Talk to an agent that knows the difference in, FBA and FBM. Make sure your agent understands e-commerce. It's different than writing the flyer shop or the attorney's office down the street. There's different nuances that need to be written and written correctly, so you don't have oops, that's not covered at the time of loss.
Gotcha. And that's such a good point, because one of the things I learned in my time in the insurance world is, as I had alluded to before, it's an entire industry based on we'll figure it out later. And we'll figure it out later isn't like loosey goosey. It really goes back to what are the terms of the policy. Correct. So all that legalese that everyone just kind of signs and moves on from, there's words in there that most lawyers probably don't even know what they're really trying to get to. But Absolutely. A lot of that is really protecting, well, it's all regulated. So you have some recourse in things as someone who's bought a policy, but they're looking for everything on their side. They have lawyers that know what they're doing, that do this every day and find what are the loopholes that we don't have to pay the claim. And That's so right. You got to think of, there's people at the insurance company who they might be very nice people. They might be the type of people you want to go out to dinner with, and they would be your friend in normal life. But when it comes to business, they're looking for every way that they can find that they don't have to pay the claims. And one of the things they might look to is, okay, what was on the application? And the application is when you originally started your insurance policy, what type of business did you say? Because they structured the pricing of your policy based on a variety of factors. What are you selling? What type of business are you? And you might think, well, I'm an Amazon seller, whatever. But are you in their mind a reseller on the front end, or are you a manufacturer? And even though, to your point, you might not have a manufacturing facility and you're just buying from a factory in China, but you might be now on the hook as the manufacturer, which would be a higher tier of pricing. Is that fair?
That is a very accurate statement, and I couldn't have said it better myself. That's what you said is those are the facts. Insurance companies have exclusions. They're looking for, I don't care if you have the best insurance agent in the world. If he's your best friend and you've known him for 30 years, the insurance policy has policy forms in it. It has inclusions and exclusions. Mm-hmm. And if you weren't truthful, or if there's something that claims adjuster can exclude coverage from and not pay that claim, they're going to try and do so. I mean, they're looking for, in most cases, a way not to pay the claim versus a way to pay the claim, which is unfortunate. It's the reason a lot of people don't trust insurance companies and don't like insurance, but it's just the nature of the beast, so to speak.
Yeah, it is. And I think one of the things with insurance companies in general is that one of the things I would get frustrated with when I was insurance is that, if you're dealing with an insurance company, an insurance carrier, everything's structured on not being necessarily efficient. And you got to think of it from their standpoint. If they were efficient and they're constantly paying out the claims and they're doing it quickly and fast, they might be paying out stuff they don't need to. Well, right. At the end of the day, all they are is the facilitator of the risk. And so who pays that risk at the end of the day? You do, as the person buying a policy. So all your policies are going to go up if they are more efficient and paying out more stuff. So in essence, they're kind of on your side in a weird sort of way by operating like that, especially if you're one of the ones that's not using it, you're just buying the policy. But if they have to pay out twice as much in claims, well, they're not just taking that out of their pocket. They're going to now start charging twice as much for insurance because they're just moving risk around. Right. And so at the end of the day, they're really not motivated. This is probably more on the health insurance side for like costs and whatnot, for costs to come down, because they're just moving the risk around. But it's the same thing with business claims. They're just moving the risk around in a weird sort of way. And so if you kind of understand that, like, you want to make sure that if the lightning ever struck you and, you have a pen and somehow someone poked themselves in the eye, which you would think, why would I be on the hook for that? But, tell that to McDonald's with the coffee thing that people talk about. Businesses get sued for a variety of reasons, or, to your point, like, even if it's totally frivolous, if you have a policy and it's within the terms of the policy, the insurance company will pay for, generally speaking, the insurance carrier will pay for the lawyer, as long as it's within the terms of the policy. But usually that is they'll pay for the lawyer to at least defend you, whereas otherwise you might be paying tens of thousands of dollars just to make somebody go away.
That's the thing is we live in a sue crazy society in the United States. People, if something happens to someone, they're looking at you as, well, this happened to me, I'm just going to sue them. And I don't know how we've got to that point as a society, but we have, and other countries laugh at us because that's just a fact that in the United States, if something happens to someone because someone, whatever, that they're going to sue you. So you're going to have defense costs, but also remember that, for an insurance policy to pay out, or for that party that's suing to receive any monetary funds, they have to prove negligence, and proof of negligence is on the side of the customer that is suing, not the insurance policy holder. Not so, just that negligence is a big key there. They have to prove negligence.
Yes. So generally speaking, exactly. But
why did that pin cause that damage to my eye? How's that company?
Right. But you might have something in the design that was like not
Yes,
recommended by some trade association, and now that proves negligence, and you would have never known that. And there's
you
just
would have.
weird things, which again, a lot of lawsuits get struck down very quickly just because they're
Correct.
nonsense. But
But
sometimes they find validity, and like that's why when I was driving to pick up my wife at the airport in Miami, which is about an hour and a half south of me, I can't tell you how many billboards I saw for
I,
lawyers.
yes,
I can't tell you how many. I don't watch regular TV much anymore, but when I do turn it on, especially if it's in the day,
they're
there's an
nonstop.
ad for a lawyer. When I
Yes,
drive by, just around town, might see a bus stop and it might have a lawyer's face on
an injury attorney for the
the
most
injury
part.
attorney.
Have you
It's
been injured? Contact
right.
us.
Exactly. And so that's not just car accidents, that
Correct.
could be,
Everything.
I electrocuted myself
Right.
on a Bluetooth speaker. How you would do that, I don't know,
Yeah.
but like you never know. Like there's things that are outside of your control. And so the more you kind of operate in good faith on the front end, usually the things tend to work themselves out better on the back end. But you always want to protect yourself from those weird things that happen. So
Right.
now fast forwarding to now we've established kind of the general idea of insurance, what it is, why you would need it as a business owner. Um, what are the rules Amazon has?
Amazon, in their terms of service, Amazon has always had the insurance requirement. They've never fully enforced it. Back in February of 2021, they started sending out a round of emails, basically telling sellers that if you're considered a professional seller selling more than $10,000 for 3 consecutive months, that you need to have a certificate of insurance on file. Needs to be at least $1 million per occurrence, $2 million aggregate. Must include products liability. Must not have a deductible over $10,000. Needs to name Amazon.com Services LLC and associates and affiliates as an additional named insured on your policy, and then go to Seller Central, enter the policy dates, upload the document, and basically send that to them. Before February of 2021, we as the agency sent the certificates of insurance to Amazon Direct. I don't know that they ever did anything with those. It went to a special inbox, COI at Amazon.com.
It was probably spam.
They're probably sitting there open at this date, but nonetheless,
we did what we were asked.
Yeah. But then again, and they randomly they would send out some more notices throughout 2021, and then middle of September they sent out, I think, the full round of everybody else that wasn't compliant yet, and so we wrote a lot of business in 2021 just trying to keep sellers compliant. But you've got to have that. You've got to have that certificate of insurance and need to get that to Amazon. But again, don't buy insurance just to be buying insurance. Make sure you're covered. Make sure that the company understands what you're selling, how you're sourcing it. Just you get what you pay for in a lot of situations. Don't get what you pay for when a claim comes around and you're not covered, because that's a bad day for everybody.
That is such a good point. And insurance is one of those that it's intangible. You don't touch it. So like we're all selling physical products here, so people can touch and know like, oh, okay, I got the pen or the Bluetooth speaker or the whatever I was looking for.
Right.
You might not realize you thought you were buying a Bluetooth speaker, but you got a pen. You might not realize that with insurance because it's all just kind of hard to understand words, even if you've been in the insurance business for a long time. There's a lot of weird stuff. And so it's best to talk to someone that at least understands the situation to make sure you're not just paying just for the sake of a certificate, but that you have, if God forbid you needed the insurance policy to pay, it actually would. Because otherwise you're just paying for
you don't want to waste $500 just to say you have insurance.
Right.
Not saying a lot of policies, an insurance policy is based off of what you're selling, where you're sourcing it from, and gross sales. insurance for the most part is inexpensive. As product risk goes higher, depending on the product type, and as sales go higher, the premiums go higher. More exposure, more products on the market, more chances something happening. So
yeah, exactly. So, well, this was a good discussion. So I definitely recommend folks, if whether talk to you or talk to someone else, if you just work with your local agent who maybe they don't fully understand insurance
right.
for the e-commerce world, because they're comparing it to the shop down the street, or you got a policy online and maybe didn't actually talk to someone, or you just want to get a second opinion because you worked with who you thought was a reputable agent, and maybe they are a reputable agent. We just want a second opinion, someone else to look at it. So if somebody fits into any of those buckets, where would they go if they wanted to talk to you?
Please feel free to reach out. We're at well-insurance.com. Call me direct. My number is 270-200-4264. I'm available via email. That's matt@well-insurance.com. Reach out. I'm here for free advice. If you have coverage questions, if you have existing policy you want me to review, I'm happy to help any way I can. I feel like we're here to help educate. Yes, we're in the business to sell policies, and that's how we make our living. But also, we have to educate our customers on what they're buying, why they're buying it. So that's first and foremost, is we want them to understand and feel comfortable and know they're protected in the event that a claim should arise down the road.
Well, exactly. Well, I appreciate you offering that. So definitely recommend folks check that out, and I'll have a link to your website and your email address. If you're watching this on YouTube, it'll be in the description down below. If you were listening to the audio version of the podcast, it'll be in the show notes on your favorite podcast player. So, Matt, this is super helpful, and I learned a few things myself. So definitely appreciate having you on.
I appreciate you having me. Thanks again, Kevin.
Thanks.